lift off. Okay, I was doing the countdown. Okay, so here's another shiny gold trade on Striker on March 15th, 2022. Beware the Ides of March on the first candle. Okay, so let's go ahead and pull up the S&P and see what the market was doing there. For a call up trade, we had that's interesting because we have one, two, that's not crossing, that's not crossing. Let's have a look at the Dow, see what that one's doing. We have one, two, three. Yeah, the Dow's looks better than this S&P as far as the daily not crossing but moving up. So yeah, okay. So let's go back to Striker. Boom. We'll start at the call of the weekly candle. And so I said with the proximity of the declining 21, which was at the time crossing downward over the 55, a white candle seemed less likely or seemed unlikely. That's what I called. It's not that far. It's just $7 higher on the 55 is $7 higher and the 21 is $6 higher. So I saw that a white candle was unlikely, but a white would be required for a call. So this is obviously a historical trade. These ones seem like an up could be possible, but also you have this rising 89, which is also providing some upward push. So we have kind of conflicting. So maybe a short duration trade here. On the 3-day, we have a doji on the previous candle, and we're also under the third. And just as a note, also under the 13. That would be like a vote against kind of. For the daily, we have Christmas cross and we have a stock RSI. So only three real pieces of hard evidence or hard support on the 233. We have one, two, three, four. So I said this would be low confidence due to the moving average lines on the 233, the daily, the 3-day, and the weekly. Because we have, if you were to do a predictive paragraph, you would basically get to right here on these in the 3 candle period. It would rise to this 34, and this you'd have to go through this to actually make it. You'd have to go through the 3 days 13 in order to reach that. And pause, you may have to get out there. From there, it would, my computer's a little bit bogged down, I guess, with the recording. From there, it could reach up a little bit higher to this daily's 34 and the 3 days, a combination of all four of these lines. So you might have to get out there. If by some way it moved beyond that, we would impact the 610 on the 233, the 13 here on the daily, and you're also getting involved with all of these ones. So I really don't see that I would have entered this trade. It ended up going all the way up to here. So that would not be expected. Um, so, but let's just see what maybe we can learn as we go through this today. Again, try not to learn improper rule. Take improper lessons or fake lessons, I guess here. But it's low. These things are moving, so there's a possibility. These ones are, you know, equivocating, maybe a little bit downward, actually. If I were to go through, from larger to smaller, this one could be maybe reaching at a close. This one, as we already talked about, maybe moving up. So I guess I would predict a short trade, which actually ended up being a very short trade. So we'll go 1, 2. That takes us to our 7-hour rule. So certainly that trade is moving. And as far as exit, I wouldn't say exit at this point. There's some movement, there's some space here where oh yeah, and I also said that I'll go back. The 255, the March 25th, um, 255 calls. So really expecting, at the hopefully you get to 260. Um, and that's only like 10 days of time with an expectation that it would not. I didn't want to buy the same week, I suppose. Yeah, because that would only be basically 2.5 days of time to actually operate. And the decay on that would be substantial. So we'll go forward. We go to the 3 candle rule. This is the third candle. And really, that would be tempting to leave. But we'll go finish the 3 candle rule takes us right here. So what do we have? We have an up auto wave line, even though that's 2 ago. We have this 377. We have continuation. So really, we kind of have 1, maybe 2 if you want to count that, although I don't think you counted 2 ago. So 1 piece with continuation here. 2, this is kinked down. 3. So basically 3 pieces of exit criteria. The fact that there's not an up auto wave line here, or yeah, that is also noteworthy, I think. So we'll go ahead one more. So now we have up auto wave line. We're above this. So still no auto wave line on this one. So let's do another candle. 264, no auto wave here still. We have 1, 2, lost continuation, not cocked. We only have a couple. So we'll stay in this trade. And at this point, we have an auto wave line. 1, 2, 3. We have continuation. So this is actually where I exited at 267, so 15 points higher. Um, Actually not sure why I exit right here because um, I guess I probably didn't really exit because it was a historical trade. But that was the correct exit, let me put it that way. So this is what's a little bit challenging. Um, in addition to the call of the candle here, I felt like with all this resistance, let's move forward to where the exit was. Hello. Okay, finally caught up with itself. So even though this is above, there's still a magnetic pull back down here, maybe back down to a bunch of this stuff. Pull, pull. These ones just in isolation look like, hey, we're well beyond the midway point, so maybe pushing all the way up to the top Bollinger Band. In isolation, this seems likely. This one, I guess you're just above halfway or around halfway between this 144 and the top Bollinger Band. The top Bollinger Band is rising. So I think it would be easy in isolation to say, hey, it's going to keep going. That is not what happened. And um, so it goes, if I move forward, it moves down 4 points, and then from there it moves up, back up basically halfway to this similar point. um, a little bit lower than where it was, a couple bucks, but it was turning lower. This was turning lower. And so how would one know to exit right there? I'm thinking about what Gary Williams would say. He would say, we're looking for the exit. We're looking for the exit. We're not looking to stay in. And that's always a balance with, you need to let him have a chance. Well, this one did have a chance. So I think this will be valuable to kind of keep an eye on in the future. and and kind of learn from it. So this went from right here 252. Like I would have probably gotten in, when it was around 250-ish or 251, and then exit around 267. Maybe I wouldn't have exited right there. Probably would have, exit a little bit lower, but still that's 15 points in about 3 days. That would be an excellent return. So a good trade to think about and to look at, in my experience with Striker has been a challenging as I've gone through these historical trades over, um, covering about 2 or 3 years of trading time on this stock. Um, in other words, I started a period about 3 or 4 years before the current date, and then I've moved forward over the last, few weeks or month or something like that, doing a lot of historical trades on Striker, and this is a can be a challenging it has been a challenging stock for me, but, um, there's some opportunities here. So that's it.